All right, folks, welcome to our third This Week in Crypto stream of 2023 and our third consecutive stream where we'll be talking about a lot of positive gains. This is continuing to look like a nice year for crypto, at least through the early part of January or the mid part of January. We've got Bitcoin up 12% in the past week, Ethereum up 11%. Solana had another continued rebound week, up 29%. You can see some of our big returns include Hedera Hashgraph, Decentraland. We had FTX token, which we're about to get into, Frax shares, which I haven't looked into for a long time, Curve. This is Curve on Ethereum and Arbitrum. We also have Synthetics. And lots and lots of price gainers overall, guys. We have plenty that reached 20% or more in terms of percentage gains in the past week. And this is just the top 100 or so market cap assets. We had dozens and dozens of instances just like this if we go further down the chain there. But in short, this looks to be a continued progression of rebounding after the brutal 2022 that many of you are sitting here still recovering from. And there's a lot to go over in terms of where on-chain metrics have shifted. The social sentiment, as you probably see from our thumbnail and the title of this stream, it's shifted drastically to a much more positive outlook, and people are reversing their negative thoughts that they had during the bear cycle, which arguably is still happening, but many people believe it's over at this point. And we're going to jump into exactly what to make of the fact that perception of prices are much more bullish than they were just 1 month ago. As always, I want to remind everyone what we do on these streams is we go over the data on-chain and social, even development activity, and point out what's going on, what things are shifting. We don't give investment advice, so if you're looking for us to say it's time to buy, time to sell, we're not the channel for you, but we do provide the most comprehensive, objective, data-backed statistics in the world in terms of cryptocurrency. And if you're a Sandbase Pro member, you've probably already gone over a lot of our indicators and charts to see just how vast some of our indicators are. Of course, we're always here for questions, whether it's on the live stream or in our support channel. You can always email us at support@santiment.net, and we'll be happy to clarify any of the metrics, indicators, what have you, that you're trying to go over. I wanted to kick things off, not looking at so much the price returns, because we already know they're continuing to look very positive. And if you bought the dip around the beginning of the year or even late December, you're looking pretty rosy right now. But there is some updated FTX news that I think is worth mentioning right now. We did see that the SEC did officially charge Samuel Bankman-Fried with defrauding investors in the crypto asset trading platform FTX. And this is a good thing. We were talking about this for the last 2 months, how Sam and the co-founders of FTX are treated will have a lot to do with the future of crypto and how much future founders and exchange operators can get away with and what they attempt to get away with. And if Sam was let off easy, that can set a precedent for others to feel empowered to basically do whatever they want and handle traders' money the way they please. And we don't want that. We want there to be a sense of safeness when it comes to coins sitting on exchanges. Everyone should feel comfortable when it comes to trading assets. And if they can't trade assets or even let any coins sit on exchanges for even a short period of time, that means that self-custody, which we do recommend, is really the only option. And you don't want self-custody to be the only option to keep your hard-earned money safe or hard-traded money safe. Coins need to be able to be exchanged and cycle from address to address in a relatively comfortable manner. Even with the anonymity and uncertainty of crypto prices, if you have the added stress of not even being sure if your coins will exist when you wake up in the morning, that is bad for crypto. And it does look like the SEC has our backs in that respect to at least a certain extent. Whether Sam is getting enough of a slap on the wrist for us to be happy with, that's up for debate. A lot of people think he should be in prison right now. Of course, he had a very, very pricey $250 million bond last month that got him out of prison. There still can be him. I guess after these charges, it looks likely that he will be going back to jail at some point, depending on exactly what the extent of this is going to be. But for the most part, this is what we want to see, right? We want to see founders who meddle and illegally handle our funds get appropriate punishment, and that is what happens. There's still mixed reactions and a lot of uncertainty as to how this is going to end up, but seeing this yesterday, most rational people have to feel pretty good about this outcome. At the same time, we saw just an hour ago an announcement that FTX is showing signs of trying to restart the exchange, which, you know, we don't have to say trade at your own risk or put your coins on this kind of exchange at your own risk. It appears that Wall Street Journal just put out an article and they interviewed the new CEO and claims that FTX has set up a task force to explore the restarting of FTX US. This poster asked 4 questions. Why would anyone trust FTX? The collapse had mainstream media and it can't recover. So how can this be? Crypto has a horrible image after the collapse, with FTX being the cause, and it would be heavily scrutinized by the US government. I think these are all fair points to make. A lot of people find it just baffling, of course, but we all know how crypto works. A few months go by and the perception of any project, any exchange, any development that people were unanimous on before can suddenly shift if there's some monetary incentive or some enticing argument to bring people back. So though it sounds shocking right now, watch this news story closely, because people could shift their mindset quickly, even for the same company and brand that screwed over billions of dollars and over 5 million people individually, I believe. Things can change in a hurry. So I think this is worth keeping an eye on. And I also queued up FTT's main metrics here to see what's going on with them, right? Because when it comes to announcements, that can mean anything, but what's going on behind the curtains, especially when it comes to shark and whale addresses, we can get a lot of insight as to how real, their native token and its value actually looks right now in terms of what the insiders are doing with their coins. So we look at 4 different tiers here. We have the 100,000 to 1 million coin tier here, which was way up at about 4.6% of the supply held just a couple days before the big collapse. And right now, yeah, they're sitting at 2.6%, maybe about a 45% drop. So that isn't a good sign. We go up one level, 1 million to 10 million coins. Not much going on there. They're still sitting at about 7%. You know, we go back 6 months, they were at about 12%. So they haven't shown any signs of accumulating. 10 million to 100 million, then it gets a little interesting here. We still see quite a bit of FTT being held in this tier here. They were holding about 34%, give or take, about 4 months ago, dumped all the way down right at the beginning of the implosion to 24%. But since that time, they've kind of jumped back and forth. There aren't a ton of these addresses, but they're currently sitting back at about 29.5% now. So that indicates that people with, I guess, with the price at a little over $2, we're talking about $20 million to $200 million. they're hanging on at about 29.5% of the overall supply. Perhaps it's people who just can't get rid of their FTT, but there are some signs that people are willing to buy it, especially with the price pump. I'll show that in a moment. And then we even have 100 million to 1 billion FTT addresses, where there was actually a huge jump in late September, going from 52.7% to 59.5%. And it's kind of just stayed there. So again, same thing as the blue tier. Perhaps it's addresses that are just, liquidity in case FTX restarts. It could be, people who still believe in the asset though, and that could be a promising sign that FTX and its relaunch could have some actual legs to it. Looking at the price, let me zoom in here a little, and we'll scroll down. You can see that the price absolutely started erupting as the new year kicked off. Going back to January 8th, it was sitting at about 89 cents. Over the next 2-ish weeks or so, not even, eight days, I should say, it went back to $1.58. This was a 176% growth just in these 8 days. It did end up retracing, and then it actually saw another launch here on the 19th. It had a big 22% jump just in that individual day, and it's kind of dancing around 229 right now, which to a lot of people this is shocking, right? Because the native token for a coin that went through this much scandal, how could it actually still have value at all? It reminds me a bit of Terra Luna before it after it converted to Terra Luna Classic, and then they had a Terra Luna 2.0. But Terra Luna Classic went through its own period where everybody dumped, and it looked like it would only continue to go down. But eventually, some people said, wow, it's such a bargain. If Terra Luna Classic ever has some value again and begins cycling, I want in on it. And it's almost always the case where you eventually see some traders start to buy what looked to be a dead project just out of speculation. And sometimes they get handsomely rewarded if, the project begins to have some validity or some real life use case again. So that appears to be what's going on with FTT. And I think combined with the fact that we have some of the larger tiers, especially this blue line holding 10 million to 100 million, and the orange line holding 100 million to 1 billion FTT, this combines, those two on their own combines for, 88% of the supply. And, perhaps there's just no buyers. I mean, at least not a ton of buyers, but it's enough to make you kind of tilt your head and say, what's going on here? And just looking at some of the small tiers, I mean, look at the 0 to 0, here, I'll do it by itself. 0 to 0.001 FTT, the really mini FTT addresses, yeah, they only hold 0%, and maybe even the amount of addresses would work better. See how they've been rising here in January as prices have gone up? 3781 addresses on New Year's Eve. And yeah, the amount of addresses has gone up 1.5%, 56 new addresses. We go up one level. Same thing. Since the New Year's, 7 more new addresses. It's not a ton, but look, these are all going up again. It looks like another 8 or 9 addresses there. They're all going up. See that? And then you get to 1,000 to 10,000, you start talking about the really small sharks, and then the bigger sharks, and then kind of the small whales. And then it starts to get kind of interesting here. So all I'll say there, to not waste too much more time on FTT and the FTX news right now, because it's so much is in the air, it definitely looks like it's a mixed bag. And as long as there are buyers and speculators that this coin can still be worth something, it's worth keeping an eye on if you are interested in the gamble. That's all I'll say. Certainly not investment advice. I don't personally like to be around any sort of native token of an exchange that went through the kind of scandal that FTX did. or just any project in general that once dealt with a bankruptcy, Celsius, something like that. It's so dicey, and it's kind of like a fool me once, shame on you, fool me twice, shame on me situation. But, I guess because we have these kind of metrics, it's always interesting to explore what's really going on when this kind of news breaks. All right, moving on to some of the more crypto-wide news topics now. Let's take a look at the sentiment going on around crypto in general, specifically Bitcoin, which is kind of the pulse of what people think about the crypto markets at any given time. We see the last 2 years of our weighted sentiment metric. For those unfamiliar, the weighted sentiment metric measures the amount of social volume related to an asset. In this case, it's Bitcoin. And then it's multiplied by the ratio of positive and negative comments using Santiment's algorithm that can actually scrape millions and millions of comments and be able to quickly decipher whether they're intended to be more bullish or bearish. So that gives us this result where we can see when people are optimistic about buying the dip, as they were way back in mid-2021, or when they thought crypto would never stop going up, as they felt that that would be the case in October and November of 2021. We also see that there was, reaction to real world news back in July 2022, about 6 months back, when we finally had like a big drop in May and then another big drop in June due to the Fed's actions of raising interest rates. So a lot of people felt that the easing would start to occur in July. We had some big positive sentiment there. And then look at this. We're now seeing really our third biggest weighted sentiment spike in about a year and a half. And that's pretty significant. This one appears really just due to the fact that Bitcoin and crypto markets have recovered so much. And, being a fresh new year and a lot of people having a short memory in crypto, they're kind of thinking, we went through our brutal bear cycle in 2022. Maybe now it's finally time to see some recovery on, a new calendar year and, more of a positive outlook for a lot of traders and experts that are kind of redefining their own outlooks on crypto right now. So with that said, what do we do when we see this kind of positive spike? Do we kind of jump on board and get a little bit of FOMO ourselves? Everyone has different reactions. It's not a perfect science where you see every single one of these positive spikes lead to, especially right here, right, lead to a big dip right afterwards, even though historically, you don't want to be in when you see these big high spikes, especially for multiple weeks. So if we saw this going into next week, we'd start to get really worried. But look, you still see plenty of positive spikes, people getting, euphoric or bullish, and then prices continue to go up the weeks after. That said, we did see a bunch of negativity as things were continuing to go up, but at least initially, you can still get in and watch prices continue to grow when there's positivity. What I will say is, based on a lot of Santiment's backtesting, when we see these positive spikes, it definitely leads more often than not to a bit of a retrace. Like I said, multiple weeks, that's when it gets really scary, when it's up here. But one isolated week, anything can happen. And this one does appear to be related to, what's been going on in the first 3 weeks of January here. And in my opinion, I think prices can go either way. When you combine it with MVRV, which we'll get into in a moment, you do see that the average trading returns are rather high at the moment for short and long-term traders combined. I want to show that too, right? We just posted about it yesterday, right here. So this is the MVRV Z-score, which kind of measures the long-term and short-term average trading returns and how they're looking based on his history for each given asset. And these are just kind of the top 10 non-stablecoin assets in crypto, you can see that only one of them, this is BNB right here, this is the only one that's actually in positive territory, meaning that the average BNB trader, whether it's short, mid, or long-term trading, they are in positive territory, meaning there is higher risk. But other than BNB, you can see that most of these assets are underwater for the average trading wallet. And that means that historically, it's lower risk than usual to be invested in that asset. Certainly doesn't mean that prices are going to go up for BTC, ETH, XRP, ADA, Doge, MATIC, SHIB, UNI, and Link. Absolutely not. But based on historical averages, it is actually a better time to be in than average when it comes to the amount of losses that the average trading address has on any of these respective assets. So keep that in mind. I think it's interesting, especially when looking at this with the combination of what the weighted sentiment is doing right now. It means that, you know, despite the FOMO, people could have a point when it comes to starting to get back in, considering how much people have been hammered in what is supposed to be a zero-sum game. All of these lines, if you look at the beginning of time of their address or of their assets trading up until now, they all will hover around zero. So when they're below, there's a regression to the mean at some point that brings them back to zero or above zero, and they all dance back and forth on that axis. So you guys get the point on that. Another point I wanted to make was we did see a recent dip just a couple days ago. If you had heard of the Russian exchange BitsLotto prior to this news coming out, congratulations, you were in the minority. It was a very small, rather obscure exchange that not many people used. However, the Department of Justice found some wrongdoing and some asset, I guess it was like some asset theft on that exchange, and swiftly took action to I guess sanction that exchange. And it leading up to the news, crypto markets and traders, they all heard that the SEC is taking action toward a crypto entity. And without knowing that it was BitsLotto or anything else, we saw this price dump right there. And it actually was a pretty sizable dump. It was about 4.1% for Bitcoin. For a lot of other assets, it was 10% plus because of how much altcoins had been rising leading up to this news. So everyone kind of panic sold, saying, what the heck is the Department of Justice about to do here? Turned out it was sanctioning BitsLotto, which people in hindsight didn't really care too much about. They thought it was kind of a lot of hype about nothing. We started seeing a lot of memes about how BitsLotto is the focal point of the Department of Justice's attention, but they're completely ignoring, you know, the much bigger news of FTX and Celsius and other more prominent entities that impacted a lot more millions of people. But regardless, when this news broke that it was BitsLotto and enforcement being taken against them, prices began to recover, and it was kind of a situation of selling the rumor and buying the news, where the news turned out to be less of a big deal. And this is a good example of kind of the overreactions and underreactions of the markets based on any, you know, news that comes out over time. And this won't be the last kind of instance of this type. Some people accuse the Department of Justice of knowing exactly what they were doing and manipulating prices themselves. We have no way of proving that whatsoever. We'll probably never find out if that was the case. But the truth is, when it comes to a news story related to the Department of Justice or a major government that is about to take action against crypto, you know, we've seen it with China before plenty of times. It can always impact prices pretty drastically. And whether someone's benefiting from the way they announce that there is breaking news coming, you know, there's not a lot we can do about it because cryptocurrency is just such a sentiment-driven uh, sector, and probably always will be, especially with the anonymity involved in it. All right. I also wanted to look at our very reliable buy term versus sell term chart here, where we have the blue bars showing the positive and bullish sentiment comments, and red bars showing the bearish and more negative sentiment comments. We see, for those who were around 2 weeks ago on our stream, I'm sorry, 1 week ago, we put an insight out about this. We started to see that the negative sentiment was overpowering the positive sentiment right here. And when we see the rare moment where there's a red bar above a blue bar, we saw a couple other instances. This one was one, and kind of right around here on New Year's Eve, which was really the market bottom. If you look back at where prices were then versus where they are 3 weeks later, this was kind of right at the bottom. And then we had another one right here, right before a big takeoff. So in both cases, when we look at the past month, and this is mostly the same when you look at any individual month, if you see negative comments on social media exceeding positive comments, which is pretty rare because positive comments usually are about a 3-to-2 or even 2-to-1 ratio above negative comments, that tends to be when you see prices rise. Crypto markets generally move in the opposite direction of crowd uniformed expectations. So if the crowd unanimously believes that some story comes out and that's going to send prices down, we saw that with the Ukraine and Russia conflict just about a year ago. Everyone said, well, this is really bad for crypto. And then March was, I think, the only really good month of crypto in 2022 before April just plummeted. Everyone was essentially wrong about the war being bad news, at least in the short term. Black Thursday, perfect example. Oh, this deadly disease known as COVID is going to completely, destroy crypto. And it was horrible news for millions and millions of people around the world. But that essentially, when it hit the public mainstream in March of 2020, that was essentially the bottom of crypto markets. And then we saw the epic 1.5-year bull run. I should say 2.5-year bull. I'm sorry, my mistake. 1.5-year bull run from March 2020 to around November of 2021. So that's often the case. And even if it's minor events and people just getting overly negative for whatever reason, that is the kind of signal you want to look for as a potential buy opportunity based on history. On the other end, you don't want to see, really, really drastically positive spikes, like this one, where there's a huge ratio between positive, where the blue bar is way up here, and the red bar is way down here. That's a massive gap. Another one right here. You can see in most of these cases, even this one right here, for a very short time, for about the next 24 hours, big positive spike, prices kind of started to go down a little bit after everyone got excited about this one little run up. So I think this is a great chart, and if anyone wants the link, I'm just going to put it in the comments right now while we have the opportunity. Okay. So let's see what else we got here. Wanted to look at the social mentions of the Department of Justice. I just put in DOJ, which it's usually referenced on social media. Yeah, so take a look at that. That was exactly when the Bits Lotto news came out. And when that's the case, we need to be very cautious of the fact that something major is happening in crypto. Certain terms like DOJ, inflation, recession, FOMC, these are the kind of government-related words that can strike a lot of fear in the crypto markets, and they tend to cause a lot of volatility. So you can definitely take a look at this kind of trend between certain words and react to them based on if it's positive news, where everyone thinks, okay, markets are now going to go up because of this news. That means prices are more likely to go down, or they think prices are about to crash because of something related to the government, and oftentimes that leads to a price jump. All right, some of our other big metrics to look at here. Take it. Yeah, let me just let's try again here. It went through. Okay. All right. So we've got a few important lines here to look at, beginning with the 10 to 10,000 Bitcoin addresses. This is basically the small sharks all the way up to the large whales before you start going above 10,000, and that's almost always going to be exchange or liquidity purposed addresses that are not going to be as relevant to this type of analysis. When you see the line for the 10 to 10,000 coin Bitcoin addresses going down, that generally means that key players in Bitcoin are dumping. When it's going up, that means those key players are accumulating, and prices generally follow what this green line is doing. So taking a quick look, you can see back in mid-2018, there was that big accumulation while prices were going down. We did have one final leg up, and that was when we just saw an explosion of accumulation that marked the bottom. And then you started seeing them dump gradually into the big run up. This may not look like much, but this was a huge percentage run up between the beginning of 2019 to mid 2019. So on and so forth. We saw the big accumulation happen from April 2020. This was right after, the COVID went public mainstream. Big accumulation all the way up until early 2021. Then when you see the big price run up, they started to take profit. We had a then all-time high in April. After the retrace, they started accumulating again. Then all-time high again in October and November. And they started taking profit about two weeks before the true all-time high in the second week of November 2021. And they basically just dumped and dumped and dumped ever since then. And right around 2 months ago, that's when they stopped dumping, at least for now. This could just be a small blip in the radar and they could start dumping again. But at least for now, if we zoom in to just the last 6 months, we get a much clearer picture showing that beginning on November 21st, they were holding about 66.8% of the supply, and they're now up to 67.3% of the supply. You may ask, how many Bitcoin actually was that? Well, it's a ton. If we look at 10 to 10,000, yeah, so we saw that about 130,000 Bitcoin now have been accumulated since late November, just about 2 months ago on the nose. That is, 130,000 times, what's the current price is at 21.15, 130,000. So we're talking about $2.7 billion. No, 27. I count the commas here. Yeah, $2.7 billion in Bitcoin accumulated in the past 2 months. That is an absolute ton. And, there are multiple reasons that we've seen this price run up since late November, but absolutely the whale accumulation that's been going on here is part of that factor, and something that we need to pay close attention to see what they do next. If the accumulation continues to go up even after this big price run up, yeah, I think that it shows that whales are pretty confident that we can continue, going back up to 30K and potentially revisit the all-time high levels that we were seeing just a little over a year ago. And to back up that good news, we're also seeing that, Tether shark and whale addresses are going up as well still. We see that there was a huge jump in buying power by these whales beginning on January 7th, and that was just prior to the absolute great week that we saw 2 weeks ago. And the good week obviously has continued, where we have seen that prices have gone up another 6% for Bitcoin just in the past week. And so when Tether is going up and Bitcoin whales are also going up, that's a pretty good combination. It's not the same for all stable coins. We see that USDC, this blue line, it's actually going down a little bit. BUSD here in orange, that's been going down a little bit since the start of the year. DAI actually continues to go up. It's at a very, I think, 2-year high in terms of the amount of holdings by these key large shark and whale addresses. So definitely more good news on this chart than bad news that shows that crypto could absolutely continue going up. It's not, the same rate of accumulation that we were quite seeing at the beginning of the year, but I still think that, without any signs of them taking profit, there absolutely can be an argument for prices to continue moving in the right direction. Now, looking at Ethereum, on the other hand, it's hard to pinpoint what the perfect addresses to look at are, but we do see that, anywhere between 100 to 1 million does have some alpha in terms of when Ethereum is going to go up versus Bitcoin. And they're starting to show signs of dumping once again, with, just the last couple days being a pretty severe dump. It doesn't mean that Ethereum is about to fall off or anything, but it means that there's not really much special attention being given to Ethereum by the sharks and whales on that network. So I wanted to bring that up as well. Taking a look at the amount of discussion related to Bitcoin, we're still below this health line that we kind of consider to be the point in which people are focusing on Bitcoin organically instead of the pump and dump coins that are not always the most healthy when it comes to the crowd's perspective and what they should be focusing in on for a healthy bull run that we could go on for the next year or two. That being said, we are moving in the right direction. We saw that Bitcoin was, if we look at like a 30, actually we can't add an indicator on this particular chart, but if we just ballpark, we look at like right here, the zero line represents 20% of discussion. So if we see something like -5 to -10, that means there's only 10 to 15% of discussion related to Bitcoin, and it's starting to climb back up. We can see like -3 now. So it's between like 16 to 17% of discussion, which is starting to look a lot better. We'd still like to see it cross this line like we did back in late September. That would be a great sign. July, this was a good sign, and we saw that right after we saw a big price run up. So Bitcoin is still not quite being talked about as much as it historically should be for a bull run to take place. And that's likely because altcoins have just been on such a tear, as we saw on our screener here, with so many big price returns compared to, the more modest Bitcoin and Ethereum returns over here. So that should even out at some point. And if we see that social dominance continues to climb for Bitcoin, that's a great sign for crypto in general. Funding rate, we'll get to that in a moment. Yeah, okay. So why don't we just look at funding rate now? I'll queue up this template here for a moment. And here's how funding rates look for the top assets in crypto. We see that for the most part, these yellow and red bars here, that means it's pretty much neutral, and there's not a huge bias toward longing or shorting. And in terms of people putting their money where their mouth is, even with the positive and more euphoric commentary on crypto markets here in January, that isn't really translating to perpetual contract funding rates, which often lead to huge liquidations that can really surge up prices. If we looked at this at the beginning of the year, there were tons and tons of green bars showing there was a bias towards shorting, and that's a recipe for prices pumping very quickly. But we haven't seen much shorting in the more recent times, and really because it's more neutral now. There's only a few assets like Engine, Hedera Hashgraph, Monero, Ravencoin, and Synthetics showing shorts. Oh, also Axie Infinity way over here, which I almost always see short, which is very interesting. But if you're trying to short hunt and chase prices, try to still pay attention to how much prices are up or down for those assets that are being shorted, because oftentimes there's just a big price surge for one particular asset, and then a bunch of savvy traders try to jump on the shorts knowing that the prices are going to come down. But if you see that an asset isn't really separating from the pack much and suddenly it gets a big short, that can be an interesting opportunity to jump in and maybe see a big price run if there's some liquidations there. Okay, so going back to our main template, let's see what Bitcoin is doing overall right now. Right before we do, I wanted to pause and see if there are any questions going on. Balrush, do you see anything? Sounds good. Okay. So let's look at what the volume and transaction volume metrics are looking like right now. We see that BTC transaction volume has really come down for the most part over the last 4 months. Trading volume is a little more up. You can see that it kind of started to roll a little bit, and this is a good sign. When you see trading volume growing as price is growing, that means that there's a lot more interest and it can continue the trend that is going on. It has kind of dropped off over the past week though. It peaked on January 14th, which is when Bitcoin kind of stopped its huge surge. We did continue to see it going up, a little bit of volatility and then more up here. So not the worst thing in the world, and trading volume is at least better than it was looking like in December here. So, a few positive signs there. Let's continue down and look at the actual utility metrics, like the amount of unique addresses interacting, which is the daily active addresses, and the unique amount of tokens being moved, which is the token circulation here in red. As far as daily active addresses go, we see that there has mostly been kind of a top that happened about a week ago, and it's normalized for now. The average amount of daily active addresses on the BTC network is sitting at about 898,000 right now. Certainly not bad at all. If we look at 6 months ago, it was down at 876,000. So we are moving up in the right direction. To get a little more perspective, if we go to the last 3 years, we see that it was really at its peak, well over 1 million per day back in May of 2021. Even when it got a little higher and its true all-time high in November 2021, you can see the daily active addresses weren't near where it was in April and May, thus making it a little bit dicey to be in during this all-time high. And then daily active addresses have kind of gradually come down, but they're not too much further down from where they were around the all-time high 14 months ago. So not the worst thing. It's certainly not near, below 800,000 like it was in July of 2021. On the flip side, if we look at circulation, it isn't looking nearly as good. Circulation on a 30-day average right now is at its lowest point in the past 3 years, where we're getting about 98,000. It's below It's below 100,000 per day, which we don't see very often if we go back historically. So that's a concern. The amount of unique tokens moving around on the network just is not quite where we want it to be at the moment. So keep an eye on that. And, you know, we have a model here. Let me write you a quick message, Balresh. I just realized something. Okay. Wanted to make sure to point that out. So Bitcoin's NVT right now, if we look at the amount of circulation divided by the market cap, you can see that we're on our 6th straight month of red bars. Historically, red bars equal downswings. There are exceptions. You know, we saw Bitcoin climb up just slightly during this 3-month stretch, but for the most part, you know, you look at history and you see a lot of price retracements during this time. We've seen a lot of anomalies, however, with prices going down during some semi-bullish divergences here. And, you know, even here, we saw a little bit of a rebound while circulation was still low. As we saw on the chart, you know, circulation was already declining between the then all-time high in April of 2021 and then the true all-time high in November of 2021. So there are anomalies that can happen, but overall, you don't want to see circulation bars red. And we're hoping that, you know, if there's a little more of a rise, that can lead to FOMO and a lot of people jumping back in. And then we kind of have a self-fulfilling prophecy where because prices are starting to go up, the crowd stops making these bars red because there's a lot more new traders coming back into crypto, which is usually the recipe we need for bull runs to happen. On the MVRV side of things, we see that Bitcoin, which is right here, it looks like it's semi-overbought on the short and midterm average trading return timeframes. It's still underbought on the 1-year divergence, so that's a good sign. But overall, you can see that there's a lot more orange and red now, indicating that we might be a little overheated. At the beginning of the year, everything was green. If you looked at around January 1st, right when prices were starting to boom, tons of yellow, green, and green, even a lot that were above this dashed line representing the opportunity zone and one of the 10% best times historically to buy. So this model was spot on when it came to some price predictions then. Right now, things can go either way. We're not seeing any assets here below the red dashed line, indicating a danger zone. We do see that Curve here is very close because Curve has been on a huge tear over the past week in particular. I don't even know if it's on. Oh, here it is. Yeah, it's up 35% in the past week, so that makes sense. But for the most part, MVRV is starting to look a bit dicey, and you can proceed with caution if you believe in the MVRV metric. Oh, I also wanted to look at the exchange inflow spikes. This can be an interesting one. We haven't looked at this model in a while, but you tend to see some of the big spikes like Keep back on January 10th, Sand Zone token on the 11th, and more recently Engine. So this is something to keep an eye on. Engine has been one of the top performers over the past week, but we're starting to see some major spikes in coins moving to exchanges, which typically indicates that there is interest in selling just in the past couple days. So this could very well mean that there's a top coming for Engine. And that's really the only big spike. We also see a minor one for Basic Attention token that's worth keeping an eye on. But if you're a Sandbase Pro member, definitely ask us for this link and we'll be happy to provide the Sandsheets model so you can make a copy of it and plug in your API. It's very easy to use. Okay, heading back to Bitcoin metrics really quick. We already kind of discussed MVRV, and we discussed funding rates. It's essentially neutral for Bitcoin. Outside of those 5 or 6 assets that show slight shorts, it's kind of neutral all the way around. Whale transactions, let's zoom back into the last 6 months. So a bit of an uptick that occurred just prior to the big jump. This would have been a very positive sign, but they've started to cool down a little bit. Whale transactions are kind of average for the 100K plus transactions, and still up a little bit for the 1 million plus transactions, but not too much exciting to say there. Now that things have cooled off this past week and things have become more flat. The amount of Bitcoin sharks and whale addresses, we already kind of went over this stuff. It's looking good with 130,000 Bitcoin accumulated by the key addresses in the past 2 months. That's a great sign. Profit taking, there was some signs of some big profit taking about a week ago, and that did flatten out the price, but it did not, push the price back down, which is something that we were concerned about a week ago. Right now, it's kind of back neutral, so not really a bullish or bearish sign right there. Mean dollar invested age, it's continuing to move up. Not too much to say there. Dormant coins and addresses are continuing to stay dormant. We typically want to see a bit of a downswing to justify a bull run. Network realized profit loss, not much there. It's kind of neutral at the moment. Supply and exchanges still looking pretty good for Bitcoin. It was sitting at about 9.4% 6 months ago. It's down to 6.6% now as traders continue to show signs of being very interested in self-custody. We touched on social volume and dominance already. It's still relatively low for Bitcoin, and we want to see that heat up a little bit to justify a bull run. Weighted sentiment, we touched on that, and even development activity is starting to heat up for Bitcoin, which is a good sign as well. All right, with that said, we're about 5 minutes until the hour. I want to give a little bit of time to look at some assets. I saw Cardano as a request. I also want to look at MATIC. And we had a request for that on our Twitter DMs earlier this week. So I wanted to make sure to get to that as well. So we'll look at Cardano first, because I know we skipped it last week. Got it, Balresh. Message received. Volume and transaction volume for Cardano is looking to be up quite a bit, especially a week ago. It's come down a little, but it's still nice to see the trading volume is a lot higher than it has been, at least for the last couple of months. And then it really heated up here when the turn to 2023 happened. Transaction volume still down. So yeah, I think it's a good sign that there's some increased interest in Cardano. It's obviously a reaction to the big price pump. We want to see it stay high because we're still in a midterm upswing here. And that would imply that prices can continue to go up as trading volume interest rising means that the price trend can continue. Daily active addresses and circulation, not much here. It's kind of declined over the past 2 months after we saw an increase right around the FTX implosion. Circulation is still very low as well. I don't think this is a very good sign. Utility is still running pretty slim, and we need to see that it is increasing on this midterm price run up. 30-day MVRV. Midterm traders who have been active in the last 30 days, they are up an average of 11.3%. Typically, if you are below the 15% line, right around there, that is around where things start to get dicey and you see tops. That is exactly when tops happened for Cardano back on the 14th. And now we're back in still risky range, but not in a danger zone like we were. Meanwhile, the long-term MVRV, 365-day active traders, are sitting around negative 39%. So that is still a great sign that prices can move up in the long term. Funding rate pretty much dead even right now, not much to say there. Whale transactions very low for Cardano, not a lot of 100,000 plus or $1 million plus transactions at all for Cardano. So doesn't necessarily mean prices are going to go down, but in terms of key traders that are, planning to cash in on this midterm price run up, or they're trying to push up the price, neither of those are occurring on the whale end. We'll skip the supply tiers because it's pretty much covered by whale transactions being so low. Ratio of daily on-chain transaction volume and profit to loss. There was some definite profit taking right at the top on the 13th, and it started to neutralize now. Dormant coins and addresses are not acting too much at the moment. It's just a continued run up for Cardano. Network realized profit loss, not much. A little bit of a tick down as we speak, but it's a very small one. So, typically these negative ones, if they add up, they can lead to some price bounces, but we've seen a ton of those that have not led to price bounces. Therefore, it's tough to recommend looking at this indicator as some good alpha right now. Social volume and dominance is staying very low for Cardano, not really much discussion related to it, even during its run up, because there were so many other altcoins that were seeing the same kind of price run ups, and many of them were a lot higher. Cardano never really got much traction on social media. Weighted sentiment sitting pretty neutral. It is interesting to see that negative sentiment was the predominant trend here during the early weeks of January, even as prices were running up. So a lot of people were just doubting that Cardano could be doing what it was doing, and that lends to a likely increase chance of Cardano continuing to go up. But for now, that hasn't really played out. Development activity, as most of you know, Cardano is one of the leaders in terms of GitHub submissions on a daily basis. It's looking pretty neutral right now. It really peaked up here in early November, but it's kind of dropped down into normal territory. But normal territory for Cardano is still a very high amount of development activity, which is a promising sign. So that's pretty much all for Cardano. I'm going to look at MATIC now, and we'll see what's going on there. That was a major darling coin of 2021. So similar to Cardano, we saw a big trading volume spike in the second week of January before it started to top out and move back down. Transaction volume is low, not much to say about either of these metrics. Daily active addresses continuing to move down, not really much here. Circulation, not much there. I think we actually have MATIC. Yeah, so we have MATIC's NVT, which is showing as semi-bearish right now because there just is not a lot of unique tokens moving around, so that makes sense. Midterm MVRV is at about 10%. So it's not in a danger zone, but it's certainly at a higher risk than average. 365-day MVRV is sitting positive, unlike Cardano. It's actually plus 5%. So the long-term traders are actually slightly in profit, which makes it slightly more risky than a lot of assets that are still seeing very negative average trading returns for the long term. Funding rates are neutral for MATIC, nothing to say there. Whale transactions, pretty much neutral, not a lot of huge spikes in 100K plus or $1 million plus transactions. We can take a look at tiers here for a minute. MATIC is priced currently at 96 cents, so that's pretty easy for the math. We can just look at 100,000 coin, 100,000 to a million, and 1 million to 10 million and see what's going on there. These are essentially the small and large whales. And they're moving in two different directions. To make it easy, we'll actually just merge them. Get rid of these two lines. We'll add the price versus Bitcoin, which is very important. All right. So yeah, you can clearly see when there's a ton of accumulation like there was in early November, that's when prices move up. Then they started to dump back down, and they just continued dumping all the way until the first week of January. And then they finally started to accumulate here. This is a nice divergence, it looks like, because the price of MATIC versus Bitcoin is moving down. But I guess we can go right there. The amount of MATIC held by key whale addresses is moving up. They were at 10.76%. They're now pretty much at 11%. So they've added about a quarter percentage of the supply just in the past couple of weeks. And I think that's a nice sign. You know, it's not a major move up by any means. We see when the major moves happened, but I think it's a nice sign when there is a bit of an uptick when prices are moving the opposite direction. Gives MATIC a little more of a likelihood of increasing versus the rest of the markets when you see something like that. Ratio of transaction volume and profit to loss, not a lot here. We saw a minor spike right at the top just 4 days ago, and that was where the price top happened, and it's pretty much back at neutral now. So just avoid seeing big positive spikes right there. Dormant movement, there is a little bit going on. We saw some flattening out of some long-term MATIC, you know, investments and addresses that were moving some coins around right around the top here. We'd need to see more of a sustained move down for like a week or a month straight, and that would be a great sign for MATIC's long-term trajectory. We also saw a bit of an uptick here. This is interesting. We saw the network realized profit loss positive spike, the largest positive spike in about a month, just a few days ago. And this was actually at a bottom. So people were taking profit even after prices corrected a little bit here. That's concerning. We'd rather see negative realized profit loss spikes when prices move down, but it is not a major spike by any means. And we saw plenty of them here over the past year, or 6 months, I should say. Supply and exchanges, it's actually been moving up a little bit over the past month. That's a slight concern. It's not a huge move up, but you know, going from 7.3% on exchanges to 7.9 is a little bit of a concern. Social volume and dominance, it's staying very low for MATIC. Not much to say there. Weighted sentiment, a little bit of a positive bias, but it's neutralized as of this week. And development activity is looking okay, nothing special, but MATIC is getting about 25 GitHub submissions per day on average, which is one of the better assets out there. So that's a good sign for the long term of the, I guess you'd call it somewhere between a large to mid. I'd call it a large cap for sure, actually. I think the rank, oh yeah, it's actually ranked 10. I thought it was more like in the 20 to 25 range, but it's been one of the best performers over the past couple of years, so that makes sense. Anyways, that's a little bit on Cardano and MATIC. My voice is a little parched. I went solo today. I did not have our brother Maxim on the call, but he should be back next week. I want to thank Balresh, as always, for helping to run the stream, and Gary for moderating, and for all of you for showing up and continuing to support Santiment week in and week out as we run these streams. You'll notice that we're releasing weekly videos on Thursday as well. With our friend of the company Minted Max. I'm doing some streams with him that are just quick 15-minute market updates on what's going on. So you can check those out too and supplement them with these Friday streams, and hopefully you find some useful information from those as well. On behalf of all of us from Santiment, thanks for joining. Hope you have a safe, warm, and relaxing weekend. And let's cross our fingers for most of you here that prices continue to go up and move in the right direction. So until next week, take care. Talk to y'all soon, and much love from Santiment. Take care.